Hey guys, how's it going today? It's now March the 21st, it's Wednesday, it's about 10 p.m. Central Standard Time, and we're going to talk about Bitcoin. It's reaching a fairly critical resistance right now that we just seem like we cannot break it. So how's everybody doing tonight? I hope you guys have had a very safe night. Hi Lisa, how are you? Ohayo gozaimasu. O genki desu ka? I'm doing pretty good, guys. I've just been trading a lot. I took a loss today, right? I'll show you guys my loss right here very quickly. I gotta hide some stuff. I don't want you guys to see. I just gotta make sure always. So I took a pretty decent loss, I guess. Like losses don't even bother me one bit, to be quite honest, because I'm used to them, right? I'm entirely used to them, and it's just kind of part of the game. So I took a loss today, right here. I was actually shorting EOS, believe it or not, like from 693, 712. It got up to the point where I got to like a $30,000 position, and yeah, it was going up and up, right? It wasn't retracing at all. So I took like I can't remember how much it was. I think it might have been $800 loss, might have been like 600. I don't really keep track of that, right? I just kind of play for fun. But yeah, it was a really profitable trade that I could have made, but the risk to reward ratio, it was barely 1, right? It was like 0.09 to 1. So it was a super risky trade, but I take these trades maybe once or twice a day, depending on how much risk I like to allocate for these specific trades. And it would have been amazing. I would have made like $2,000, right? If it actually played out and it got to like around, I don't know, maybe 670. If it got to there, 675, I would have made 2K. So it would have been an awesome, no, not 675, 640-ish, 645. But what I've learned about EOS, like as soon as I took the trade or the loss, was that EOS barely retraces when it's on a massive uptrend. So that we have to learn about some characteristics of the trades, right? And or about the coin. And what we've noticed about EOS is that when it's on a tear, it barely retraces. And when it does finally start to correct, everybody kind of rallies in for a short position and they just leverage it to the max. So yeah, I just want to show you guys some of my trades that I took as well. But overall today, I'm up 3.8K, took an $800 or $600 to $800 loss. So I'm still well over, you know, $3,000, but the way I feel is still kind of crappy, right? Because who likes it when they take a loss, right? It just doesn't really matter how up you are. When you take a loss, you just feel really garbage about it. Thank you, Lucas. I really appreciate that, my friend. So I just want to show you guys that I'm human as well, and it doesn't matter how good of a trader you are, you will always take losses. But we got to remember that losses, they make us who we are, right? They really strengthen our trading abilities, and over time, if we keep taking these losses, we're going to learn how to do things a lot better. So don't ever be discouraged when it comes to losses, guys, right? It's a part of the game. It's how these valuable lessons are learned. And when we learn enough valuable lessons, hopefully we can become better traders over time. So coin market cap right now, Bitcoin is on a tear right now, but it's meeting some very critical resistances that we need to talk about. And right now, if you guys got in on on the trade recommendation, right? About 8 hours ago, this is where I recommended. I recommended to basically, you know, we found support there, and the entry range was anywhere between 87.50 and about 88.50. So if you guys are still in a trade, you know, there's no reason to exit the trade now. We're still doing incredibly well, in my opinion. We don't need to worry too much about it just yet, perhaps. But we are facing some critical resistances, and you need to make sure you either set your stop loss or keep it the way it is, or set it to a higher stop loss, right, where you're gonna at least break even or take some of your profit. So that's how I manage my trades personally, right? Like I was in a Bitcoin position, but I'm no longer in it because I'm a scalper, and scalpers tend to trade a little bit differently. I'll add on dips, right? Then I'll close it at the top for very short term, and I'll keep playing these bounces, which could be a lot more profitable over time. But at the same time, they can also be much more risky, right? So it all depends on your experience as well. Hey, thanks a lot, Keith. I really appreciate that, man. Awesome. Thank you very much. So yeah, coin market cap, we're over $350 billion again, which is a very good sign. We took a long time to get to 350 billion, and that's kind of a critical number that we would like to stay in. Maybe 400 billion, 500 billion would be even better, but we don't get to these market caps until we're over $10,000. So hopefully we will get there in a few days. But we need to talk about these critical resistances that were coming up. Oh, I just very quickly, right, here's a stop. This stop right there is around 8,600. That's where I wanted to accumulate to. And the reason why we bounced off of these zones is because, well, that's a massive channel. It's near the 0.5 Fibonacci level of this particular wave as well. This channel is holding out very well. It also did about a 1-to-1 extension from these waves here. So all in all, there were no reasons to not enter the trade. We have to remember, as I always say, that without risk, there's no possibility of reward. So let's talk about Bitcoin. Let's talk about it from a little bit further back so everybody has a really good handle of what's going on. Every time, guys, okay, every time you see this right here, you see a structure like that form, okay, something like this, always draw a parallel line automatically, okay? Like, let's say you only saw these particulars. Actually, I should probably draw it a little bit better. You don't really get the perfect parallel lines until we get to a critical spot. So what are these coins doing right now? Notice how we're at 90.50 and we just have a hard time breaking that, right? So even before, let's just say you guys saw only this structure form. You should have drawn your parallel line right away. And as soon as these structures formed, that should have been more of a reason to draw these parallel lines, right? And that's how we were able to target around this region as well for a possible bounce, which was awesome. So let's go over our Elliott wave count from a little bit near the beginning. Notice Bitcoin's getting rejected right now. We're ticking down a little bit here. So the way that I'm drawing my Elliott waves is like this. I'm first of all taking this as wave 1. That's 2, right? And there's a 3 somewhere way up there that we don't know about quite yet. And hopefully it gets to this specific region over here. And then this one goes to roughly 10K is what I'm projecting. And always ignore my time analysis, okay? I don't really do time analysis since I'm a really lazy trader and I'm a day trader, so it doesn't really make sense for me to do time analysis for the longer term, right? I'm basically projecting that if this was my wave 3, right around, say, let's just say something like that, okay? Well, I'm gonna just simply drag this over and, you know, we'll project up to 9,500, but not realistically, probably won't even get there. Bitcoin's definitely ticking down a little bit right here. I'm just managing one position of mine. Don't mind me in front of you guys, all right? Let's just see how this goes over here. I'll probably end up doing it live in front of you guys. So my target is roughly 9,350, 9,400, maybe 9,500. And the way we're counting our Elliott waves for this structure is like this. 1, 2, this is most likely 3, okay? That's 4, and this is the 5th one right there. So that makes perfect sense in my eyes. And if we take our Fibonacci retracement, we go from this point where it began to this point right here to this point right about here. And what we see is that wave 1 is often the longest and it is never the shortest. And because of these rules of Elliott wave, we see that this wave 3 definitely punctures above the 100% level. Therefore, if that one gets to around there, and we see this wave 1 and wave 4 territory, where this one was a resistance and this one is a support, there's also a good chance that this wave 4 will land somewhere around there as well. And then finally, we get our 5th wave that goes up to there. And the way this one is obtained is by taking a massive log. Yeah, I'm in log on the daily chart, and we just simply draw it around here. And what we see is that by extrapolation, this actually hits the perfect $10,000 level mark right up there, right? And this one here gets to a very reasonable retracement as well. So just based on these theories, it's very likely for it to retrace to around this region once it's done. So what we try to do as a trader is really plan, guys. We plan very, very far in advance. And once we plan well enough, we can get an idea of where these probable trades could land. So we try to have a bunch of trades up our sleeves, and once we have enough trades up our sleeves, we can just plan for down the road, and as it pushes through the pipe, we've got a lot of leads generated. So right now I'm in a, no, you know what, I'm not going to talk my position quite yet because I'm unsure of it. So let's just see how this actually ends up going first. Before I talk about it, maybe I can make back some of my losses today. Are they actually losses if I'm actually really up? We'll see, okay? Okay, you know what? I'm just going to show you guys my position. I'm in a short position right now for EOS. The reason I entered a short position is because of a top right here, right? I don't believe it's going to break out of it, okay? I don't believe it's going to break out of it on the first attempt right here. So I'm in a decent short position. I literally caught the top. I literally caught the top right there, which is very lucky, but you know, I shouldn't have entered it. Honestly, I shouldn't have entered it because once you lose on a trade, it's very demoralizing, right? And because it's very demoralizing, you might not want to enter a trade just for a little bit at least, you know? So I don't know why I entered it right away, but I think I'm gonna close it because I'm getting kind of nervous, right? Because, you know, you kind of get jaded when you lose, right? But I notice I have like only 3,000. It's not that much, right? Not that much at all. I'll just close it in front of you guys here and just take a little bit of profit, I guess. Come on, just dump onto me. Come on, baby. I don't really have that much. It's only 3,000. I was gonna play like a 5,000 coin position, like around, you know, that would have been like $35,000-$40,000. But I didn't do that, right? I played just enough here. There we go. My market, everything executed. I entered that trade around, I entered it, whatever that is, 14 minutes ago roughly. Actually, no, 32 minus 14. That's 18 minutes ago I entered it. So I literally just made $265 in front of you guys in a live stream, which is kind of cool, right? To see this live. So I literally just market executed it at the top, or sorry, I put a limit and I was just stacking my limits up there, right? Because I figured, you know what, it's not likely for it to break on the first attempt. And if it did break, like, you just think of the risk to reward, okay? For the trade that I literally just took, you think of the risk to reward like this. So I entered a short, I do a lot of RR in my head. So as I entered it, notice how it's at 708 now, right? If I waited till 708 instead of closing at 711, well, every penny, guys, every penny for 1,000 coins is $10. Notice at 705 now, right? It's at 705, which means automatically that Bitcoin didn't break it. So if I closed my position at 705, it would have been a $450 profit instead of 265. See, that's a really big difference in profit, right? Now, if I waited even more right here, right, they just tanked it to about $7, I would have been in profit by $600. Right? So I've lost out in right here in front of you guys about $350 in profit because I was kind of getting impatient. So when you factor in the human psychology as well, here, let me take my profit in front of you guys of 265 bucks, all right? So I'm still down from my original trade, but overall I'm up for the day, which is, you know, but think of it like this. If you're in a trade and you lose, it doesn't matter how much you've made throughout that day, you're human. And because you're human, you feel kind of crappy about it, right? So because I was getting anxious, we factor in the human psychology that, okay, I'm gonna explain something to you guys, all right? This is a very newbie rule, okay? This is a very newbie rule where you're talking about the wave 4 cannot retrace into the wave 1 territory. You got to Google the definition of it if you want to call me out, okay? And the definition of wave 4 territory into wave 1 is that it can only apply in non-leveraged markets. So yes, in a non-leveraged market, in a decent time frame, they should not overlap. But cryptocurrency is literally one of the most leveraged markets of all time. Look at BitMEX, where you can leverage 100 times. So make sure you guys understand that these rules are only guidelines, right? They should be more so treated as a guideline. So make sure you understand that by a wick, it's 100% acceptable. Not only that, you guys gotta also understand rules like this as well, okay? If you wanna call me out, you better make sure you know it, because I will gladly disprove you. I've read more than 8 books of Elliott Wave. So for example, this here can be a leading first wave diagonal, okay? Where they will most often overlap. And most often as well, the wave 4 will actually, or sorry, the wave 3 will be much less impulsive than the wave 1, okay? So is that overlapping? Absolutely, it's overlapping, okay? Let me even Elliott wave wedge, okay? Elliott wave falling wedge. Let me just show you guys, like, just a simple picture, the first one that literally comes up, okay? Let's see the first one that comes up. Well, look at this. This is the first picture that comes up. This is 1, that's 2, that's 3, that's 4. Well, the wave 4 is actually overlapping the wave 1 territory. So you guys have to make sure you really understand these rules really well, right? You can't just read the first 10 page of an Elliott wave book, right? You got to make sure you read like 5, 6, 300-page books before you understand all these different sub rules that they offer. So I just thought I'd point that out as well. But it's honestly, okay, if you trade Elliott wave, guys, honestly, the biggest pet peeve to all Elliott wave traders is that other people say things like wave 1 territory cannot retrace, or wave 4 cannot retrace into wave 1. That's honestly the biggest pet peeve to all Elliott wave traders, because that automatically implies that those people haven't really read any books whatsoever, you know? So yeah. Okay, my favorite book is AJ Frost, Elliott Wave. This is definitely one of my favorite books right here. Let me just check it out here on Amazon to show you guys. This is definitely one of my favorite books right here to read. It's kind of an older book, but it's by AJ Frost. Awesome book. Like, I really recommend that to people. And another book that I recommend is The Visual Guide. Okay, The Visual Guide, Elliott Wave, because this one's got some very complicated patterns, and these complicated patterns, you guys are gonna, it's awesome, okay? It's so awesome, this book. They have so many complicated patterns that it will blow your mind trying to figure it out. What I used to do like 2 years ago was I got this book, and I would just go through it like step by step, and it's like learning from puzzles, and you try to deduce what's going on. So this one by Jeffrey Kennedy is awesome as well. So those are my 2 Elliott Wave books to have read there. So anyways, I hope that gives you a little bit of insight. So have you guys noticed what just happened here, right? We don't really know how far Bitcoin's going to go down, or EOS for that example, right? So I could have closed my position earlier, but what if this was the very final bounce only, right? So some people would argue, well, maybe you should have held it longer. Nah, this was my plan all along, okay? My plan was to target this right here, and I'm a very conservative trader. Where's my Fibonacci here? So I took my fib from basically this region right here, okay? I took my fib for this region right there, and I took another very risky trade. But you got to remember that with risky trades can come really crazy rewards. So when I entered this EOS one, I said to myself, all right, if it breaks above right here, I'm going to just take my loss at around 7.30. Then I would have taken literally like a $200-300 loss, right? But if it actually worked out and I'm targeting the 236 level, I'm getting a risk to reward of 1 to 1, right? So I closed my position right there. I maintained my discipline, right? If you guys notice there, I closed it at 7.11, right? So that's a perfect risk to reward. Now you ask yourself this, even though the risk to reward is 1 to 1, are you, or am I, a good enough trader to be right more than 50% of the time? Because a risk to reward ratio of 1 to 1 is literally, you know, it's 1 to 1. Right? As long as you're, let's say, 60 to 70 to 80% right, even if you were 60% right, I hammer at these 1-to-1 trade setups all the time because, well, for my scalping positions, you guys would not even believe it, but my win ratio is well over 85%, maybe even 90% because of the way I play. Now, for my normal day trading positions and for my swing, you know, my win ratio is maybe 60, 70%. So I lose all the time as well. And if you guys have followed me for a while, you know how transparent I am. So for the people that say things like I'm only tweeting my wins, nah, I love to talk about my losses to you guys, especially because it's the losses that define your character, right? I am calling you out. Then how do you have an ending diagonal or a truncated? You know what, AP? If you want to call me out, you can donate a $100 super chat question, because if you want to be rude, it's not even worth my time to answer you. So anyways, let's move on. Why does that even even make sense. Like, you're gonna ask a really rude question and try to call me out and expect me to answer it. That's just such weird mentality. It's so weird. If you want to be a dick about it and you want me to acknowledge you and actually have a professional conversation with you, at least send me a $2 donation so I can validate your question, you know? So I'm not here. I don't know. It's just weird logic to me. So yeah, I don't even know why I acknowledge the haters, guys. Isn't it so much more fun to acknowledge haters sometimes than to acknowledge love? It's like, why would I want to be in a healthy relationship? I'd rather be in a more abusive relationship with a girlfriend because it's just so much more interesting, you know? So here's my Elliott wave right here, where we say that, okay, this is a really good resistance right here, okay? This resistance will act as a very hard support. So that's why we were saying that if this one actually retraced, okay, if it retraced, it would have most likely retraced to this particular region right here only, which makes sense, right? Because we acknowledge that rule of wave 4 should not retrace by a lot into the wave 1 territory. Actually, we allocate a pretty big tolerance, right? We allocate a tolerance between the 382 all the way up to the 618 Fibonacci level. So there was a $200 range where we were averaging it. And as you guys saw in my last live stream where I took like a $200 profit in front of you guys, do you guys remember my base price? It was crappy, my base price. My base price was actually $88.35. I did the most horrible job, guys. It was a brutal job. And thank you very much for that donation, by the way. I forgot to mention your name, and I should probably scroll up and give you acknowledgement there. You guys chat so much, though, I don't think I can scroll up all the way. I really appreciate that donation, man. Thank you very much. So I averaged my price to $88.35, right? It was brutal. And then I was asking my group chat, right? My group chat with Eric Cho, Johnny, Leon, and Ched, and they're all like, yep, we got in at 88 or 87.20, 88 or 87.50, 87.75, and here I am, the only guy that actually got his price well above 8,800. So out of my group, I was the most horrible trader apparently, okay? Because they all got in literally like well over here. And here I am, like base price of 88.35. Okay, so because this rule of ours is being acknowledged, the wave 1 territory there, right? And this is pretty much wave 3 right there. And it's very easy to count this as well, okay? This one right here, it looks like it's only 2 waves, but if you go to a very micro level time frame, what you see is a little bit of congestion right up here. And if you go to an even lower one, thank you, David, I appreciate that. Please do a TA for Leon Lambo on ICX. Yes. Did you guys see Leon? Did you guys see Leon? He was so mad today. He was still mad that he lives in New York, right? He's got like a few Lamborghinis and like Porsches and Ferraris. So he started like driving around in winter when it was still snowing out in his Lambo, right? And he was like ranting about ICX because he bought at the top at $12 and then he held it for 3 months, right? And then when he finally cut his position, he finally took his loss. Of course, ICX, what did it do? It did like a 50% gain or something, right? Like a 50-60% move. And then he was all like, man, he's like, ICX is nothing but a Korean barbecue and I hate Korean barbecues. So funny. Leon is awesome. Yeah, he's the newest person that we've added to our group chat, and that's the first person we've added ever actually. He's the first person we've actually added to our group chat, which is kind of cool. So what we're doing in our group chat is we're looking for one person to develop. That's the truth, guys. We're looking for one person to develop into a killer trader, and we're charging a $50,000 membership fee. Dead serious about this part, guys. That, hey, there's Eric, he can confirm it as well. We're looking to find a trader who's very, very serious, that wants to be guided and mentored, and this is basically a one-time $50,000 fee, and we're not going to be taking anyone for another 6 months. So every 6 months we're going to plan to add one person to the group. And Roberto, last time it was just a joke, right? It was a $10,000 monthly fee. But this time it's actually like a 50. I don't know if you guys know if I'm joking or not, or if you guys think I'm serious. So you guys can take that however you want, whether it's serious or not. You guys can approach me if you guys are actually serious traders, right? And who knows, maybe we'll even start a hedge fund one day. That'd be kind of fun, but that's just looking for down the road. Hey, Eric, are we serious, Eric? Eric, can you tell them right now in the group chat if we're serious or not about this 50K membership fee? And trust me, guys, well, $50,000, think about it, okay? We are very experienced traders who are fairly successful, where we've had experience managing, we'll say a few million before, right? This $50,000, if you guys are new to the market, man, oh man, could it be very worth it to some people. Most likely, if you've got 50K to spend on a membership, you probably are playing with a few $100,000, which we would probably get you guys your money back in less than a week, put it that way. Considering I play $30,000 positions and I tend to double it in a few days, as you guys know, maybe 10 days at most. It's really realistic that people who have 50K will end up just skyrocketing. Anyways, we're not going to talk about that anymore, okay? We're not going to, you guys can take that as a joke if you want. It's up to you guys, all right? Is Sam the Carpet Man here? Well, Sam the Carpet Man wanted to pay the $10,000, right? He wanted to pay the $10,000 to join our fee here. So, okay, anyways, we're going to clear up some of our Fibonacci ranges here. And what we see is that based on our, I'm going to go through it again with you guys, okay? The Fibonacci, you guys know the Elliott wave count already, but you need to understand how Fibonacci retracement, okay? It ties in with Elliott wave. So we take our Elliott wave right here. Then we take our fib retracement, we say wave 3 has to hit a target of over 1 to 1, right? And then we say if that hits our target, then this one's a very probable, what's the word, probabilistic? It's very possible. Man, I gotta stick to speaking Asian. I can't speak English sometimes. So that's a very likely target for 10K as well. And we're getting a lot of resistance here. Let me just zoom out on a further time frame. We're getting a lot of resistance right here because it's really obvious, right? Just it's a big cluster region right around here. Do you guys see this? People would wonder, why are we hesitating there? Go back, guys, go back. We're gonna go all the way back to February 8th. And what you guys see just around these regions, well, what price range do you guys see right here, okay? Right here, what price range you guys see right around where we are right now? And if I just go all the way back here, does it make sense that we're getting hesitation here? Yeah, this is a massive trendline resistance that we need to break, right? So that makes sense. And this also makes sense according to Elliott wave, that this wave 3 retraces about 100% or more, right? So take a look. By some rules of confluence, if we take subwaves 1 and 2, which I should probably change the degree to make it more simple. If we take these right here, what we simply see is that wave 3 hit a 1-to-1 extension right above it, see the 1-to-1, and then wave 5 will hit a 161.8 right around 93 to 9400 region. Now let's break it down even further. We know exactly what structure we're at, right? And then once all of these form, you guys have to remember, never ever do this, okay? This is how newer traders end up getting screwed up by traders who are in the market longer. You have to understand how Fibonacci is taken. People always tell you guys take Fibonacci from the low to the high, but there's a lot more rules to it than that, guys. A great rule is that you have to make sure you take your retracement of wave 2 only for wave 1, and then you take your retracement for wave 4 only for wave 3. And then you take, if you guys ever take, you say, oh wow, it worked for the first 2. We're gonna take our retracement for only this wave. This is how you guys are gonna get destroyed in the market, okay? Let me ask you guys how many subwaves are in here. Well, there's 5 subwaves in here, right? Like that. So if you're taking your Fibonacci retracement for all of these 5 subwaves, well, how is it any different than if we were to take our Fibonacci for the whole structure right here, and this actually forms one subwave, right? So you have to remember these rules of Elliott wave. It's going to be critical to your success if you guys want to have really good understanding of Fibonacci, okay? So now that we have basically this right here, right? This yellow line is our wave 3 going upwards. So we want to take a Fibonacci range, right, with an area of resistance and support, which happens to be right there, and it also happens to be right here. So this is a very realistic scenario where this range could hit here. Hey, thank you, Christopher. Your videos are awesomely instructive. I've been having a crazy fun time doing analysis and day trading. Don't get Luna too drunk on tequila. Everybody, that's kind of the inside joke, right? That's the inside joke that my dog's an alcoholic. She kind of is an alcoholic. When I do Molly, she does it right there with me. I'm just kidding, guys. I'm just joking. So now let's zoom in to an even lower degree and figure out what the heck is happening here. Why the heck is this doing this kind of structure, right? So what we would end up calling this right here is, let me show you guys, okay? This here is basically the first wave, right? Now, what we're unsure of is the count, all right? Let me explain to you guys in detail the bearish scenario first, all right? The bearish scenario, you guys do not want to hear it, I don't think, right? But let's say we talk about the bearish scenario where maybe this was actually the fifth wave right there. Okay, these two things are very relevant. If we take that as the fifth wave, then this right here ends up making like this. Okay, that's the 5 waves. But the bearish scenario can also be seen like that, where now instead we get our waves kind of going like this perhaps, right? In some weird formation where this could be perhaps B, right? And we end up getting an ABC like that. So both sides can actually be argued very, very well, okay? So if this was the bearish scenario, this count is off the table, okay? This count is off the table and we're going to end up retracing more, because then if this is the bearish count, then unfortunately we will break down and correct further, okay? So these need to be very understood right now, right? And it might even retrace a tiny bit into this region, right? Maybe to the 618 level. So I need to introduce to you guys the bearish count as well. How will we confirm the bearish count? Easy, by simply breaking out of this channel and getting a lower low than where we got right there around 87.50. So please understand that there is a bearish count as well, and as a trader we should always understand that there are two possible sides to every coin, right? When we flip a coin. So if it breaks out of this channel, if it breaks below 87.50, boom, you guys need to make sure you trigger those stop losses, or you can hold and maybe add more in your dip to manage your risk. It's up to you guys. I'm no financial advisor. What I would personally do is if I entered at 87.50ish, 8800, well, what's a small correction of $100, right? To me, it's nothing at all, right? Even if we did that. When will you hook up camera so we can see you, cutie? Probably in about a month. Actually, maybe, because I'm moving in maybe middle of April, and then I plan to go to Thailand in May to go see my friend Mel. I'm super excited about going there, so it might not be for a while. And I'm also super lazy, and the main reason I don't actually want to hook up my camera is because I'm too lazy to cut my hair. That's the truth. I'm too lazy to cut my hair. My hair has been growing out for like 3 months now, and I don't give a crap about how I look at all. But you know what? I don't give a crap about how I look. That's how why I don't cut my hair, right? Oh, don't even say that, Kev. Don't even say that, Kev. I'm not dumb enough, Kevin, to, you know, speak to someone I'm not sure of, put it that way, okay? Just so you know. So yeah, maybe I'll cut my hair, maybe not, right? Maybe I'll just you know, get a Brazilian wax as well. I don't know. We'll see. So this is why right here, guys, I would do it for 50K, Phil, if you're serious. I've learned so much from you and would love to be your student. No, you wouldn't be my student, D. Lee. You would actually be a student of Eric Cho, myself, Johnny, and Leon, right? So you would actually learn quite a bit from there, and it's more so catered towards the people who have a substantial amount of or capital or principal, whatever you want to call it, because you know it's really taking your trading to the next level, right? So you know Eric used to, yeah, he used to be a financial advisor, right? For example, Johnny, he's like vice president of a really big company, put it that way. And myself, I've got a background in engineering and mathematics, and of course I trade full-time as well, where I have a pretty good track record in general. And of course there's Big Chat as well. So it's geared towards people that really want to progress their learning. And the only reason why I'm talking about it is because so many people have made some ridiculous offers, guys, where they really want to learn. And for us to accommodate for our time, since the majority of our time is spent on developing the community and trading as well, well, you know, there's got to be some sort of monetary value involved as well, right? But that's something that's kind of down the road to consider. So, you know, you're welcome to definitely send me a direct message there, D-Lee, by Twitter or by YouTube here as well, or just tweet to me and we can be in contact if it's something that you wanted to talk about. That's exactly what it is, Chelsea. It's an all-star trading team. And our goal, don't get me wrong, guys, you know, I don't charge anything for anything. There's so much free content out there that it almost makes no sense to pay for anything ever. The only thing that I would personally pay for is Roderick. If you guys ever seen Eric's bot, it's a learning bot. That bot is crazy. Eric has been testing it for months now, and he's always posting these trades of his, right? Because we're kind of evaluating it with him as well. And I kid you not, Roderick is a beast, okay? It is such a beast, his bot. And it's a very limited position. And man, if you guys haven't seen that thing in action yet, it's making like 5 to 50% profit on some trades. It's probably making more than his old job. I know it's making more than my old engineering job, and it's doing literally nothing whatsoever. And this is not me pumping up Eric. This is me speaking the truth about how it's literally the cheapest product on the market. Like cheapest product in terms of getting a subscription to it, and it's very limited as well. Like I'm gonna pay for it, but Eric's not gonna let me pay for it. He's not gonna let me, you know, subscribe to Roderick there because well, that wouldn't be fair, would it, right? So man, it's quite amazing, right? Eric didn't develop it himself. He's got a team of data scientists, 2 of his really good friends that have spent months and tens or 20s and 50s of thousands of dollars developing it. He didn't develop it to make money. He developed it to basically help out the community, and it's going to take a pretty long time for him to get his return on investment, you know? So it's not really for monetary gain. It's more so just to help out the community by offering a really cheap product compared to others out there right now. I have no idea how much Roderick is. Eric's actually never told me, and I've never asked him, right? The only thing I've ever asked Eric that's that personal is how big his dick. Oh crap. I've never asked him how big his dick is, okay? Never asked him. Have you guys ever heard Eric talk? He sounds like a completely white person, right? He's got this American accent. He's so white. He's so white. Eric is the definition of what we call a Twinkie. He is so yellow on the outside, but he is so white on the inside. Oh my, or sorry, so yellow on the outside, but so white on the inside. I kid you not, the first time I heard him talk, I was like, who is this cracker? Who is this cracker speaking right now? His English is so perfect, right? Anyways, yeah, Eric is pretty white to me, you know? I'm pretty white too. I'm pretty white. So this is the bear scenario. Bear scenario, you guys need to make note. We break below 8,800 and then 8,750. Bear scenario's on. But you know, that's what your stop loss is for, guys. That's why I was mentioning earlier that your stop loss, even if you got into here, right, you would set your stop loss to even like below this territory, like around 8,500. Okay, 85.50 or something, and you go for still the same target, and you still get yourself a beautiful risk to reward ratio. Let's say you ended up laddering in a bear scenario, where if I were to play it, that's what I would do. I would buy more down there. It would average out my price a little bit better, right? I would be able to set my stop loss still at 88.50, same target as well. And guess what? If you actually laddered your buys, if you entered at 87.50 and you bought more around the 8700 range, if we do get the bearish scenario, that's still an amazing risk to reward ratio, right? And then, so what? You guys got stopped out at 80. If it does, you know, end up being a completely wrong count, and we end up getting much lower to like say 8K regions because of something went drastically wrong, right? So if that actually happened, that's okay. You're only risking now 1.8289% of your capital, of your principal, which is completely acceptable. Now, let's say that we actually ended up getting a very bearish scenario where we did some drastic count wrong, and we got down to 8K regions, right? Like, let's say we got to $8,000 regions down over here, and you played it on the bounce, and you went to your swing position at 8K. Well, the next logical target would be the high over here. You would set your stop loss for something pretty generous, maybe even 7,500 or 7,750. Well, guess what? You're now, if you end up getting into a successful trade, that 2% risk of yours is nothing, because the net profit from 13.75% minus your 2%, you're still up 11%. So this game is all about managing your risk and all about money, right? So that's how I see the game of probability and the game of trading, right? It's not about taking one trade. It's about making sure you take multiple trades so you can try to win the marathon, not the battle. That's why I'm 100% comfortable showing you guys my losses. I might be the only trader that is that transparent on YouTube and Twitter, where I show you guys my wins and my actual profits, right? Not all of them, but it's really important for you guys to understand that I'm trying to lead by example and that I need to drill it into your... Absolutely, Ninja. Ninja asked me a really good question. Philicon, was college worth it for you? Now you're making big bucks trading, and do your skills come from engineering? Well, school might not be for everyone, but I guess it allowed me to gain some sort of structure and logical thinking by, you know, systematic workflow, by learning how to think logically. Especially math is all about logic. When you think about it from that perspective, it's all about ifs and only if statements. If this happens, what will happen after that, right? It's a series of deduction skills that you obtain. So I think when I studied math and engineering, it absolutely helped me out now in trading. Maybe that's how I'm able to think of multiple scenarios. I don't know. I think it's helped me. I don't regret going to school. I don't regret anything in life whatsoever, because why regret anything, right? You are who you are today, and everything that you know is because of every little piece of experience that you've acquired over your lifetime. So no, I don't regret going to school. I'm really glad that I went, and it's not all about money, my friends. It's not all about money at all, right? It's about what makes you happy. And I was very happy in school. And you know, whether I have a lot of money, whether I have a little bit of money, I don't think I'd be any less or more happy. Just remember that money doesn't really do much, guys. Like, it just alleviates some of the burdens of modern day society, right? That's really the truth. It alleviates a lot of the burdens of modern day society, and it just allows you to be a little bit more free. But sometimes the happiest people in the world are the ones that have the least, right? So yeah, a little bit of philosophy into the... Is Eric even here? Is Eric even here? Eric, you have a small dick? I'm just reading the chat. No, Eric's not here. Okay. No, he's not. I don't think he's here right now. He's too busy, man. Eric is way too busy. Do you guys know that? He's so busy. Like, our group for crypto, like, we trade. Oh, there you go. Eric's here. I'm just joking. He doesn't have a small dick. We call him Mr. Big Dick Eric Cho, right? Yeah, we actually call him Mr. Big Dick Eric Cho because he sent us a dick pic, right? Because I was asking him to borrow me one of his photos for his dick pics, because every time I sent it to a girl, right, it's just too small. Like, I don't have a high enough resolution camera to capture it, so Eric borrows me his. And what's the difference? Yellow? It's all yellow anyways, right? So yeah. So anyways, we're now looking at this structure. If this was actually the scenario, right? Let's say this was wave 5. Maybe, oh, I did it again, guys. I didn't mean to talk about dicks again. Crap. I'm trying to be professional here. You know, I'm trying to be as professional as I can, and it just didn't happen. So sometimes we get something called a truncated C wave, where the C becomes very, very short, right? It falls short of the A wave. So that could be a case as well. If that's not the case, then this could be a very likely case, okay? Where this is now A up there, okay? That's now A up there. Let's say that was, I don't know, this was 4 or something like that, and this was actually the 5th wave. Well, that could be a B possibility, something like that, maybe, like that as well, right? So there's many different circumstances, but one of the main reasons why we're having trouble breaking out of here is because of this resistance, right? So guys, we're not officially in an uptrend until we actually break some of these structures. Basically the 90-50 range is kind of a key number, 90-55 around here, where this high region is. Now if we break out of there, there's a very strong possibility that we'll end up uptrending to here. But let's break this down even further, guys. Let's break it down even further, and we go into, for example, a 10-minute chart. Okay, now this looks really ugly to a lot of people, right? Super ugly. Hey, thanks, Kev. I appreciate that. I know you don't need this, but maybe you can buy Mel, Mike, a whiskey/Red Bull bucket over Thailand. Keep up the entertainment. Yeah, I'm definitely gonna do that. We're probably gonna. I've been to Thailand many times before, and we've got a lot of things to do. And my friend Val, she's my bae. She's my boo. You guys all know Val. Valcoin. Say hi, Val. She's right here right now, probably. No, I don't think Val's here. I've invited her to Thailand with me, but I don't know if she's gonna come. So, thank you very much once again. I really appreciate that, man. So let's say that we actually counted our waves, right? Where the wave began right here. Okay. Actually, let's see what this extension gives us first from here. Okay. Yeah, I don't think that could be a first wave. I think this is a truncated C wave. So the way I'm gonna have to call this is I'm going to go to even a 5-minute chart to get a very micro time frame. Let's say our wave 1 started there. Well, this one seems to make a lot of sense as well, where this is a 5 subwave going here, right? That's a 5 subwave. And this one just is a really crappy 5th wave that didn't quite properly finish the way it should. So if I were to actually call this right here, my 5 waves, yeah, I could make the argument that this is 5 waves like that, where the 5th wave is double topped, right? Like something like that. Or even if I really tried, I'm sure I could also make the argument on a super ridiculously low time frame, right, where it goes 1, 2, 3, 4, 5, that this could be the 5th wave right here as well. Okay, and if that was the 5th wave, then we could even argue that this goes something like that as well. So there's many different ways to argue this. So what I am looking for right now, specifically to enter a trade again, is I want to see if this parallel channel, that was so oxymoronic, right? Or that was so redundant, rather. It's like, what's the word where you're saying a parallel channel? Of course channels are parallel. That's like saying this word right now. It's so understood that a channel is parallel, right? That's like saying the word ATM machine, right? You don't say ATM machine. You just say ATM because the M stands for the machine. So that was a really redundant word, what I just said there. Sorry, what was I talking about again? I completely forgot. I get really sidetracked again and I go off on tangents. Oh yeah, I was talking about cats. Cats and tuna. You guys ever wonder? I'm just kidding. There's no more cat and tuna rant. So this channel right here, I just want to see if we're actually going to break it or not. Now, we might break it to the downside, and if we do break it, the correction target will be roughly 8,700 to 80, maybe 650, around there. But the moment that we break above this cluster of resistance here, that's going to signal a rally, in my opinion, okay? It's going to signal a rally to the 8,400 range. So I'm going to be looking very closely at right here, okay? I'm going to be looking at a retracement level. Let's see how far this could possibly retrace. Well, we're seeing that it's actually retracing to the 382 level, which is very, very respectable. Do you guys notice right here? Why is it retracing there? Well, because of here. Take a look. This was massive areas of resistance before. Here as well, you know, 1, 2, 3, 4. This was kind of a bull trap region, you could say, or a correction phase. And there's no doubt in my mind that we're correcting to roughly here right now. So this is a no trade zone. If it is a trade zone, well, you guys got to make sure, to you guys, it really depends, right? You have to make sure you understand the risk involved. Like I always say, guys, this rule number 1, preserve your money, okay? Rule number 2, protect your money. Rule number 3, grow your money. If you cannot protect it, how can you grow it, right? If you can't preserve it, you can't protect it really as well. So you got those two things, preserving it and protecting it goes hand in hand. So you have to make sure you understand this game is not about being a good technical analyst. This game is not any way related to doing, like, knowing your charts very well, knowing your theories. This game is about managing your money and being very, very wise about how you enter positions. Now, I'm tempted, okay? I'm super tempted to enter a position here. But if I do enter it, I'm gonna really, really firmly understand the risk associated with it. Now, if I do target still the 93.50 range, then my stop loss is gonna be really tight. My stop loss, I'm only gonna risk 1% of the trade to gain a possible 5%. Now, this to me is a pretty kick butt risk to reward ratio of 4.43. Right? Risking 1% every time, risking 1% every time for 4%, absolutely, it's worth it so far, right? But you know, I might end up, even being successful, right? So another really good probable case is you buy it above the breakout. you simply buy it above 9100. Okay, that's kind of a key region right here. I think if we break this particular structure first, we can just end up rallying to there. So if we still target, say, the 9350, or let's just say 9400 round number, then my stop loss will be slightly below it, right? So I'd be risking, we'll say, even 1% here as well. That's still a 3.3 to 1 risk to reward ratio, which still makes fairly decent sense, right? So I'm seeing a lot of good plays, but nevertheless, right now, probability wise, there's a good chance we'll get there, but there's really no confirmation yet based on Elliott waves. So if we look on this on a micro level where we're actually getting to here, so, well, the death cross, we'll talk about it when we get there, right? I mean, if I changed up my EMA right here to, if I change the white one, okay, just so you guys know, the white one here is the 200 moving average, right? 200 moving average, and this is my 55 right here, right? Right, I'll change this to 100. You know, the death cross is traditionally when the 200 and the 100 moving average crosses over, right? So we're still far away from it. Like, you know, we're still very far away from it. If we actually get there, guys, it's gonna be roughly around here, right around this region. Okay, if we actually get to it, right, this is obviously going to curve down. Just to extrapolate some of this data, it's obviously going to curve down something like that over the next few days, right, regardless. And this white one will obviously get to right around here. I'll make this white just to extrapolate more data, right? So it'll obviously do something like that probably, right? Or maybe if we end up uptrending to 10K, we'll end up, you know, doing something like that. So when these two meet, it's going to be a very critical point around, you know, wherever this ends up being, right? We could easily end up uptrending. So if we ended up uptrending, it'd be amazing, right? Where it's going to kind of just go around like that, and this is going to support all of them, and the yellow one will actually be above it instead. So if that happened, beautiful, we're going to be in a very big bull run. But right now, it's really difficult to predict what's going to happen, right? If it ends up going like that, and the white one actually just gets elongated and it supports all of it on the bottom, then we would have a major, major, major bull run, because then the 55 and the 200 moving average is actually on supporting everything. But of course, if the bad thing happens, which I don't like to talk about, right, is if we end up, you know, going something like that, and then the yellow one simply crosses over to the bottom right here, right on the bottom side, oh man, is that going to be disaster if we actually get a crossover. Because traditionally, whenever this crossover happens, keep in mind this is called the death cross. There's also the golden cross, right? The golden cross, when that happens, it's the most magical thing in the world. Let me show you guys a golden cross. Okay, hasn't happened since 2015. Right here. Okay, this is called the golden cross right here, this specific region. Investors like to anticipate a golden crossover, right? You guys notice how the volume, people are anticipating it, and the volume is starting to spike up because they're anticipating a golden crossover, right? So basically this is what I'm talking about, where the death cross, it crosses over like that, right? When the death cross happens, it's just really nasty. Well, this crossed over already. Let's show it right here, guys. This is the death cross, right? Where the 55 was above it, but the white ends up being above it now. And every time we get a death cross, it's disaster, right? So, and then you get a golden crossover, and then, you know, all the way back in November 2015, and if you bought it in November 2015 at $273, you literally have no reason to sell it, guys. There's no reason to even sell it right now from an investor perspective. Now, as an investor, right, or any hedge fund, for example, who are investing really long term, if you actually get this crossover, it will signal to a lot of investors who have been holding for years, guys, it's time to actually sell. So this death cross is very significant in the next few days coming up, right? I mean, 10K, guys, is kind of right around the corner. Let me just make sure I get into my log scale here. So right here, it's right around the corner, right? I drew it a little bit off there, actually, first time around. My apologies. So it's literally around the corner. If we just extrapolate this information, right? I mean, just based on a move up like that, we can easily see that it's moving fairly symmetrically from the past, right? So we can easily anticipate to get to 10K if it happens in a few days, guys. Like, we're talking about a week at most. So in about a week's time, it's going to be very critical. Notice how this white line is sideways pretty much, right? Yeah, it's going to change direction very soon because we're now going to get sandwiched. We're going to get sandwiched between this massive wedge that's been ongoing since around February, or sorry, since December 17. And I'm a little bit scared, honestly, because I don't want it to be the death of Bitcoin, right? But at the same time, you know, I'm kind of excited because there's a lot of profits to be made. So I kind of wrapped up everything going on already, but just to give a very quick summary, we're now in a channel, okay? We got a chance to hit 9350, 9400 range, but a lot of criterias need to be met. We got to break well above this, we'll just say 9100 range, okay? 9100 range right there. Now, the chance of us breaking into an extended fifth wave is very unlikely in my opinion, because we have not seen an extended fifth wave in any corrective phase at all, right? And we don't know if this is still a corrective phase or not. We don't know if this is a medium-term bull run that might happen, but what we do know is this is a short-term bull run, right? Short-term bull run can easily turn into a short-term bear run, right? Which can easily turn into a medium-term bear market, which can turn into a long-term bear market, which we don't want. So hopefully we end up breaking above this sometime before today or tomorrow, right? We're in a pretty decent retracement already at the 382. There's this fairly strong market sentiment to support above these levels right here. So as soon as we break right above there, yeah, I can definitely explain SRP, okay? So when you are going into a normal non-log scale, SRP asks, if you don't mind, can you briefly explain the difference between log and the other scale? So the other scale does not compress the data, okay? It doesn't compress the data whatsoever. Everything is linear. So for example, if we see here, you know, if we see here, let's say this is $1,000, okay? This is $1,000. Well, everywhere on the chart, the way that it looks is going to be exactly $1,000. Imagine this was 1 inch, okay? Just imagine, actually, let's be more realistic since I'm Asian. Let's imagine it was 3 inches, okay? That's a little bit better. You guys can easily relate to that better since I'm Asian. Let's imagine this was 3 inches on your screen, all right? So if this was actually 3 inches, oh, thank you very much, Sam. I really appreciate that, Sam the Carpet Man. If you guys don't know who Sam is, this is Sam right there. My way, carpet floors, and more. If you guys are, you're in the New York area, is that it, Sam? Where are you from again? I can't remember, but Sam the Carpet Man is an awesome guy. He's super positive, and I like those kind of people in my channel. I appreciate that donation, my friend. Thank you. So let's say you're looking at your monitor, and this was literally 3 inch in size, okay? All right, and so the $1,000 range will also be 3 inch in size on your physical monitor as well. But let's say let's say we go to a weekly chart, okay? A weekly chart is everything is proportional, right? So if this move up right here was, let's say, $10,000, right? Well, this move up as well would also be $10,000 like that. But when you go into a log scale, notice how it changes right away, okay? So $10,000 on a log scale, with which this is right here, is equivalent to $10,000 here as well. It tries to make it more proportional. Does that make sense? So it interprets data a little bit differently. When you're looking at a very long-term frame or timeline, it's much better to get a log scale. Okay, that just, hopefully that makes a lot more sense. So if you're evaluating it from a long-term analysis like weekly, definitely use log. Some people use daily like Tony Vase, right? I'll use log scale depending on how the time frames will draw these resistances and supports. Let me give you guys a very clear example, right? One big difference between Tony Vase and I was he nailed one resistance and I didn't nail the other, while he nailed the second one and I did not nail the second one. So let's give you guys an example of how I nailed this resistance right here, but did not nail that one, okay? So once again, I nailed this one, okay, right here. I nailed this one with flying colors, right? But I failed to nail this one right here. I just want to get an X over here. Where the heck is X? Right here. I did not get that one. But Tony Vase failed to nail that one, and he nailed that one. And I'm going to give you guys a clear example of how it's actually, how we both got it, and we both got it wrong. So this is a non-log scale, right? If I draw my non-log scale right here, just kind of like that, what I see is that I would have nailed this top right there. That's how I was able to call it. This was a bull trap region, but I didn't nail this one, right? This is a non-log scale. So now if you actually go to a log scale, or sorry, I want to take my log off. Okay, this is a lot better now. This makes more sense, where we're considering some bull trapped regions like that. So that's how I was able to nail this top right here. And in a log scale, what we see is we see trending along this line, right? So I was able to nail that because it was non-log, okay? But now if I go to a log scale, it looks very different, right? And if you connect the lines, you can't really try to connect it through there. Instead, you actually get this point right here, right? So the lines are actually interpreted very different based on the way the charts will interpret the data. So I hope that makes a lot of sense there. What moving average is the yellow line? I use these numbers right here for Fibonacci. I use 8, 13, 21, 55, and the white one is 100. So the yellow one that I use yellow because first of all, I'm yellow, okay? I'm Asian, if you guys don't know that, and it's also my favorite one, right? 55 is the main one that I use for a day trader. So that's why I like to use yellow and 55. If you take 8 plus 13, that equals 21. If you take the next Fibonacci number, 21 and 34 makes 55. And then the next one after that will be 84, right? So because you take 34 is the next one. 34, you guys know what I mean. Plus 34 is equal to 89. So the Fibonacci just keep going up and up and up and up like that. So yeah. So I think you guys pretty much have every scenario. You have the bear scenario where we end up downtrending to 8,700, right? You might want to consider, or 86 even. You can stick to your stop loss, guys. I mean it. Stick to your stop loss, okay? I'm no financial advisor, but if I were to give you any type of hypothetical advice, okay? Hypothetical advice, I would tell you guys to keep your stop loss very tight, okay? You always have that option. Do I want to break even or do I want to ride it more, right? The recommended stop loss is obviously around 8,000, okay? 8,600, 500. This was the entry, right? So you guys are actually well in profit already. You're over 3% up right now if you are still holding. And the stop loss was around 85, 8,600. We'll just say here, you guys always have the choice, right? Do I ride it down, right? If it does end up downtrending, right? And do I just write it down and stick to my stop loss and take a loss? Or do I actually raise my stop loss to break even? So that needs to be always considered. And of course, the other scenario is, do I add more? If I'm in a position right here from 87.50, right? And that was my target way up there, for example. We'll just say it was like 83.50 right there, okay? Notice how your risk to reward right here at your stop loss of 8,600 is about 3.38, we'll say. Well, if it ended up going lower to the 8,600, right, 8,600, your average entry price would actually be lower now if you bought more. It might be, say, 87 something, 87.80. Your stop loss is still the same at 8,600, right? And your target is actually higher. Well, it's the same price, but now your risk to reward actually changes. And now you've actually got a risk to reward of 8.61, right? So that's how you kind of think about risk to reward. You think about managing it all the time. And that's why I always say that it's all about managing our positions and our risk. So a lot of numbers and calculations need to be done on a daily schedule if you guys are day trading or swing position or swinging, right? So I'm just trying to introduce some concepts to you guys that might be a little bit new, right? So yeah, once again, this is a key resistance we need to break. Well, big one is really about 80.50. Honestly, if you guys see this break, right? Okay, I'm just gonna go far back so you guys understand why this is a massive resistance, okay? If you guys see this break right here, you're gonna see my favorite candle, right? If that breaks, it goes all the way far back, like to over here. I'm gonna give you guys an example. I'm gonna introduce to you guys a candle that you guys might not know the name of, and remember this candle, okay? I'm gonna go to like a 5-minute chart for where we saw a massive breakout, okay? Right here. Just example right there. This was, in hindsight, right? I thought it was a more bearish because of some signs, but in hindsight, this was a major resistance area, right? So right here, what we call this candle, I don't think you guys have ever heard of it before, but I'll introduce you guys the term. I made up this name of the candle, okay? So clearly we couldn't break it a few times right here. We couldn't break it there, we couldn't break it there, we couldn't break it there, right? So whenever you guys look for a breakout, you basically want to confirm some volume right here, okay? Now these two candle names, make sure you guys remember them, right? Or volume name, this I name it for the volume, and I name it for the candle as well, okay? What you're looking for when you break out of a resistance, right, for the candle in the full volume, it's called a big green dildo, okay? That's what it's basically called, a big green dildo. So if you break out of it, that's exactly what it's going to be. So just make sure you guys know exactly the name of it and how it looks. And that's the absolute truth, okay? So if you guys see it break above here, right? Did you guys like how I was building that up? I was building that up for a long time, right? If my life doesn't work out as a trader, guys, I'm gonna try to do stand-up comedy because I think I've got the face for it. It's pretty funny. So please make sure you guys remember. I don't know how anyone would ever take us seriously if we actually developed, like if we actually started a hedge fund. But you know, we have a lot of experience of managing a good amount of money, and despite how unprofessional all of us are, well, when I say all of us, I mean mainly me. That's what I mean. I don't know how anyone could ever take me seriously. You know, like, you know, Johnny works for thank you very much, Nick. I appreciate it. Johnny works for a really big company. He's like, you know, a vice president of sales or whatever, and he's like, hey Eric, if trading doesn't work out for you, I can hire you. But then Johnny says to me, but Phil, you're a pretty big HR liability. We can't hire you. That's pretty funny. Yeah, he's probably watching this right now. I'm not a liability, okay guys? I'm not really a liability. So key things to watch for, again, I just need to reiterate one more time, is you know, a break outside of this resistance, right? A break outside of this channel right here could signal a lot of disaster. So you guys, you know, if you're in a trade already, a break outside of here would most likely be around 8900 region, right? If you break around 89ish, not just by wick, right? Just by wick, you're seeing a lot of sell-off volume and the level 2 order book looks really scary, you might actually want to consider just breaking even. So these decisions are always there for you guys to make note of, okay? No, Donnelly, I'm not a Gemini. I'm a Virgo. I'm a Virgo. My birthday's in September. I'm 33 years old. So yeah. So guys, you know, we're looking decent, you know? Like we bounced at least from 86.50, right? That's pretty, I don't know if that's bullish or bearish or how we want to see it, but we're in fairly neutral territory, like all around. The only thing that we can make note of is like these indicators are useless right now. Trust me. That's why they even talk about RSI or MACD. Every indicator is in entirely neutral territory right now. Like, do you guys see the RSI? Right, we're finding RSI support, right? Or this is RSI support, like right around these regions right here. This acted as resistance. This acted as semi-support there, and we're getting a double bounce off of the RSI. But you know, if one had to argue, one would say, oh, this is bearish right now because we're bearishly diverging into a descending type of triangle. But one would also argue we don't really have a lot of points yet, right, to have conclusive data that's descending. So these are the best ways to play, in my opinion, right? You either just stick to your stop loss, you either add more, you either break even, you either add more if we break out. So there's just so many different ways to play as well, right? Yeah, I definitely, I don't really look at BFX data much, right? I more so look at level 2. Ninja asked a really good question. Do you ever take a look at BFX data or volume pressure? Let me show you guys BFX data. So bitfinex data is just basically, it shows you a lot of things on here. I'm actually going to go to the short versus long table to show you guys. So this one is the one I used to look at a lot. Like, it kind of gives you an overall picture right here. So I do look at it quite a bit as well, but not really as much anymore, because on Trading View it shows you longs versus shorts, right? We'll let this load very quickly here. If you guys go to your Trading View, you can actually type in BTC here, just for example, shorts. So right now we see shorts they were liquidated, put it that way, in the past 2 hours. A lot of them, yeah, BFX data doesn't really work a lot of the time. It always says that try closing other tabs or programs to free up memory. It's like, come on, I got 32 gigs of RAM, man. Like, it can't be me. So that's why I don't use it a lot anymore, because it rarely works. So anyways, longs were liquidated right now, right? Or yeah, shorts were liquidated. And if we look at the long table right now, we see it very neutral as well. So the longs are very low and the shorts are very low. So if we do a long versus short comparison, it's very inconclusive data, because it just implies that the market is unsure of what's going on as well. Come chat on Whale Pool. I do look on there quite often, Mike Morrison. Whale Pool is, I kind of check out their feed. It was really funny when I was watching the Whale Pool yesterday. This guy, he was talking about strippers, right? And he was talking about how Canadians, how they were throwing loonies, right? Loonies at the stripper there. Yeah, and everyone was like, what's a loonie? What's a loonie? What's a loonie, right? So this is what he's talking about right here, the Whale Pool here, okay? And then all the Americans and, you know, other nationalities, they were like, what's a loonie, right? Is that thing with that guy on it? And then the guy's like, no, a loon is a duck, you idiot. And then he was talking about how, oh yeah, there's also a toonie in it as well. So it was a really funny conversation. Like, it was a pretty funny conversation. I should probably go there a lot more. So if you guys don't know about Whale Pool, they're like, I'm not promoting them or anything, I'm just talking about, since it was brought up, right? They've got like a live stream usually going on, a live stream, and they got like a live chat as well when they do stream, and it's just a bunch of people that are just hanging out in there, and they're all goofs. They're like me. Like, I'd fit in there, you know, really well. We were just talking about the most ridiculous things, right? And just making absurd, it's basically a bro channel. It's bros, you know? It's like a frat channel. It's always good to surround yourself in groups, because you learn a lot more, you can get advice, etc. So anyways, guys, I'm gonna wrap this up. I could probably talk for about 5 hours. It's been going on for a little bit long already, and yeah, so thank you very much, Crypto Bentley. Your transparency is amazing. Keep it up, buddy. I appreciate that. So make sure you guys keep an eye on this 8,900 region, okay? If we break below that, keep an eye on 8,750. Right? And you know, if it breaks below 8,900, you guys gotta make sure you make up your mind. Do I break even, right? Do I add more in my short? Do I wait for my cut stop loss, because this channel is now useless, and this will actually end up retracing more if that was a third wave, right? So there's a lot of things you guys have to decide, and keep note of this region up between 90.50 and 9100. If we break there, we've got a good chance of trending up there to 93, 9400, and that's kind of where I stand, guys. So I really appreciate you guys coming in to watch my live streams. The ones at night don't get too many viewers. We only get about 1,500, but the ones during the day, like, I've actually peaked out at, I think, 4,000 before. I'm officially the most watched live stream for cryptocurrency on YouTube. So thank you very much, guys, for all the love and the support. And usually I would do a giveaway, right? Because I've reached some milestones, such as being a really I guess a top crypto channel now, you can say. Normally I would do a giveaway, but because everything, Jane, I don't talk about women in a disrespectful way. I respect women all the time. I don't know what you're talking about. I was just gonna say, should we ban Jane? I was just gonna say, like, Jane is saying right here that Phil needs to stop talking about women in a disrespectful way, and I was just gonna make a joke that we should probably ban her right now. I'm just joking though, Jane, it's not gonna happen, but then all of you guys would probably call me, you know, disrespecting women if I banned her. So now I can't ban her because, you know, she's accusing me of something really rude that I firmly disagree with, but if I banned her, then it would just imply that I'm disrespecting women because of what she just said. So I really can't ban her, right? So you guys see the dilemma and the conflict of interest here? So, like, do I ban her? Do I not ban her? What do you I'm just joking. I'm not gonna ban her, guys. Yeah, so anyways, you guys are hilarious, man. But yeah, I was saying that because I've reached some major milestones. Normally I would do a giveaway of like $1,000, like $5,000 or $10,000, whatever. But because everything is free, you guys actually have to donate to me instead, right? You guys have to send me like $5 to my donation addresses, and that's how we're gonna sustain everything for free. So I do the complete opposite, guys, of what every crypto YouTuber does. right? They do giveaways. They do giveaways to get followers. What I do is I ask my subscribers and followers for money instead, okay? That's probably the best way to keep the channel. So why would I want to do everything that they do? So I'm not going to give you guys a giveaway. I'm never going to do a giveaway because everything is free. So you guys should be the ones donating to me, okay? Just to be very clear. So have yourselves a great night, guys. I appreciate all the love and the support always, and thank you very much for all the love, and I genuinely mean that. So thank you for tuning in, and I will see you guys in the morning. I'm probably just gonna go chat with Val because I haven't talked to her for a long time and I miss her. So have yourselves a great day. Take care, guys. Bye, baby whales, mini dolphins, and tiny little penguins. May you always march yourself to safety and to profits. Bye now.